Welcome to the market update of Belvoir Capital for the end of September 2023. So what we have seen in the last couple of weeks, we've seen very weak markets, especially on the equity side, but also on the bond side. And we've seen the interest rates, especially in the USA, rising to new highs over the last 1 and 2 years. And new highs meaning being at 4.6%. And through our system, we've indicated this, that we are on the higher envelope, and we see now a pullback on the interest rates. We don't expect high interest rates for the next couple of weeks to come, and this should be very supportive for the markets. When we look back 3 months, we've been on the Fear and Greed Index on a very greedy side compared to what we are right now. We're more on the fear side. And what happened is that September has proven to be the worst month in the calendar year, and through a chart prepared by Goldman Sachs, from 1928 on the S&P up to this year, we've seen that the S&P always has a bad month in September. And this year, we've seen a drop in the overall indices in between 2, 3, and even 7%. We look, for example, for the Nasdaq, which was the worst index in the US and overall in Europe and in the US. So what happened was the dollar was very strong, nobody expected it, and the Fed came up with a little bit of a surprising wording, not with new higher interest rates on the short end, but with the outlook to stay higher with the interest rates for longer. So we don't expect the interest rates on the short end to go down to 3 or 4%. We've seen them at 5.25, maybe another increase at the end of the year, but we're going to see high interest rates until the end of next year. So that was really negative for the markets, and the dollar appreciated. And also the oil price went up to new highs, close to 100 in the WTI or on the Brent side, which also gave the indication of another higher inflation wave to the overall market. What we've seen right now is that the risk and fear index, as I just mentioned before, we see nice entry levels. So the tech stocks, only a few, which led to the market in the year so far, have a little bit of a pullback, like the Apples and Microsofts and Nvidias, in between 10 and 20%. And also the very defensive stocks and the very conservative quality stocks had another down month in September, which for us indicates very interesting entry levels. So we are not so negative for the rest of the year, and we expect the markets by the end of the year being higher than today. So stay tuned for the next update for end of October. Thank you very much. Bye-bye.